All right, we're on chapter 8, internal control and cash. So we are going to do objective 8.1 on one video, and then we're going to do objectives 2 and 3 on a video together. And then we're going to do uh, sorry, learning objective 4 by itself. And then we will combine objective 5 and 6 together, and we won't be doing 7. Okay, so let's dive into what is internal control? What is that word? What do those words even mean? Basically, internal control is a way that we're going to protect the assets. So, to give us this long definition right here, I'm not going to read it to you because there's a nice bulleted list right here. And sometimes a bulleted list is just easier to see. So, safeguarding assets, we want to encourage employees to follow company policies. So, sometimes we think those policies that we have to follow at work or they kind of sound stupid. A lot of times they're really not. One where my husband works at, they can't take, they can't get gifts from different outside people up to a certain dollar amount because then that would sway his decision on, maybe awarding a contract to one vendor versus another. So there are those policies in place, and they usually are for a good reason. Okay. Promote operational efficiency because if we are running efficient, we're making money and we're going to stay in business longer. Okay. At this point, you've probably made a few mistakes and you probably can really vouch for accurate, reliable accounting records because if you ever searched and searched trying to find why your balance sheet didn't balance, you're going to wish it was more accurate, right? So you can make better decisions when you have accurate information. Okay. We have the COSO, Committee on Sponsoring Organization. They provide the thought leadership related to all of internal control. Okay. I guess that's the highest authority. I think that's the only one. There might be somebody else, but almost everybody follows COSO. Okay. It's the only one they even talk about when you take the CPA exam. Okay. So we're looking at protecting the assets because we have these companies that are public companies. Okay. These are the corporations. And remember, way back in chapter 1, our corporations are this big piece of the pie. And we have these happy or unhappy stockholders that own little shares of the pie. Well, we could go and buy a share of Walmart stock right now. Okay. We could do that because we have technology. And so it's really easy to do. So there's a lot more government oversight when it comes to public companies because they are selling stock to the investing public. Okay. And when corporations have to have their audit done, their annual audit every year, that auditor, whatever CPA firm has that, they also have to look at internal control. How it's kind of like a dual audit now, like way before Sarbanes-Oxley, they might consider internal control, but they don't really have to. They have to now. Okay. Sarbanes-Oxley came about in 2002. We had two major accounting frauds. We had Enron and we had WorldCom. And I was going to college in the middle of this, and I got so tired of hearing about Sarbanes-Oxley every day. But it is still the biggest legislation that we have had in the recent past. And I know some of you are like, that's 23 years ago. Yes, but it changed a lot of things. Kind of like the Great Depression changed a lot of things. Um, this legislation changed a lot. Okay. Um, and why did they do that? Because nobody had any confidence in corporations at the time. So, oh, yay, we have Sarbanes-Oxley now. We're never going to have an Enron or WorldCom again, right? Wrong. We've already had other accounting frauds happen. It's going to continue to happen. We just need to put the people in jail when they get caught. They act like it was the wild, wild west of accounting before Sarbanes-Oxley. There was rules. Um, but, it's like anything. I sometimes think about another new gun law. Okay. It's really only going to affect the law-abiding citizens. The criminals are already breaking their law, so why would carrying a gun or make bans on guns? It's going to end up only the criminals having guns. People are going to try to steal and they're going to continue to do that. And that's where a good system of internal control can really help a corporation or any entity. Okay. I already mentioned the auditor has to evaluate internal controls and they have to make a statement in the audit report. Internal controls, what happened? They evaluated them. Okay. The PCAOB, this came about, it came out of Sarbanes-Oxley. Prior to the PCAOB, we had the AICPA. Pretty much all the AICPA does anymore is administer the CPA exam. So they sort of got kicked by the wayside, and the PCAOB took over their job. Okay. Accounting firms are not allowed to audit a public company and then also provide consulting services for the same client. So that's what was happening in Enron and WorldCom. The auditors, Arthur Andersen, they knew what was going on, but Arthur Andersen was making a killing off of these other consulting fees. Okay. So now Sarbanes-Oxley says you can't do that. You can have the audit or the consulting. You cannot do both. Some very reputable CPA firms have found a way around this. They have a different division that they've spun off to the side. They might even put it in a building next door. That's their consulting services. And then the other business is audit. So some places have gotten away with that so far. I still think that might be just a little unethical. But you can see why that's why the auditors didn't put anything in the audit report of what was going on because they were going to lose all this consulting revenue and they didn't want to lose that. Okay. So now we have some really stiff penalties, 25 years in prison for securities fraud and 20 years for an executive making false sworn statements. They actually make the officers of the company sign off on the annual report now. Okay, so there are five parts components of internal control, and I love that they spelled this out. This is the first time I've seen this in a textbook. This is what they used when I was taking the CPA exam because it's a very nice acronym, crime. It is a crime to not have good internal control. Okay. Remember though, some companies are really small. The hotel that I worked at while I was going to college was super small. I was a bookkeeper. I had worked on the front desk. I had worked as a night auditor. Our functions got crossed quite a bit because I started working there when I was 19 years old. They knew they could trust me. Okay. That's your first line of defense. Hire good, honest, ethical people. If you filled out a job application here recently, you will see sometimes doesn't have anything to do with the job you're applying for. They really are they're questioning your integrity. If you see a manager stealing, what are you going to do? Things like that. Because, like, they can teach anybody to do anything pretty much. Okay. So we should be breaking these down one by one. Okay. So we're going to jump to the next slide. Um, Internal controls are monitored by internal auditors. It was an internal auditor that brought WorldCom down. I actually got to hear her speak one time in person. I was so excited. And it's kind of funny. She said she got in a room because she knew something was wrong and she just drew a whole bunch of T accounts. And I had taken my students to this same little speaking event, and they were like, "Oh, Miss Alano's going to love this." But that's how she found the fraud, was through the T accounts. She traced lots of journal entries and found out what they were doing. And it was a little scary. She had to start watching her back because she could have been knocked off. But it was an internal auditor that did that. External auditors are not necessary, they're not employees of the company. They do get paid by the company, but they are hired through a subcommittee of the board of directors. So let's just say this is the board of directors, and then there's this small little subcommittee called the audit committee. They're the ones that actually hire the external auditors. So these people that are on this committee have to meet the same standards as the external auditors. So if you're an accountant, CPA, you're going in and you are doing the audit for Walmart, you cannot own one share of Walmart stock. Okay, you can't, because if you do, then you're in a position where you don't have independence anymore. So everybody that serves on this audit committee will also, they cannot own any shares of stock on the corporation. Okay, because they are looking to be independent from the corporation. Okay, so I just mentioned your first line of defense: hire honest, ethical personnel. Assignment of responsibilities. Okay, I have this little acronym that I learned while I was taking the CPA exam. I love it. We have, it's called ARC. We don't want to cross these functions. A stands for authorization, R stands for recording, and then C stands for custody. Okay. So I just mentioned the hotel that I worked at when I first started working there at 19. I was on the front desk. I worked a few days during the day and I did the night audit on the weekends. So I had custody of cash. Okay. I should not have authorization or recording since I had custody. Somebody different should have those functions. Okay. When I became the bookkeeper several years later, I moved over into this role of recording. Okay. I was never supposed to go back and work on the front desk again because then I would have custody of the cash. And here I did not do this. Let me disclaim that. So I could steal the cash here and then I could go make a journal entry covered up. So you see how those two functions don't need to mix? Recording and authorization. If I can authorize something, then I can authorize myself a brand new computer. I can make a journal entry to hide it. Okay. This is a perfect world. Okay. I did go back and work on that front desk because they trusted me. They knew I wasn't going to steal from them. Okay. So, so I did. Again, first line of defense is to hire competent, reliable, and ethical personnel. And you don't want to put people in a position to position where they can, because you just never know what you might do. I always think of, well, if my kid has some rare disease not covered by insurance and I need $1 million, I'm not working for anybody that I could steal $1 million from. But if I had that at my disposal, I might think about it. Okay. So that's why it's good just not even have those functions crossed. I never was in charge of $1 million, maybe a few hundred at the most. Okay. But we want to keep these separation of duties. Now, they don't talk about it right here. I want to talk about a thing called collusion. Okay. They're going to talk about it in another slide, but I got my little arc drawn out right here. So, my friend Georgia, she continued to work on the front desk when I moved over into the bookkeeping role. Collusion would be I could say, "Hey, Georgia, you steal the cash and I'll make a journal entry and we'll split the money." I never did that, disclaimer. Okay. That would be an example of collusion, though. There is no system of internal control that will ever prevent collusion, ever. employees colluding together. You just can't have a good system of internal control that will ever prevent that. Okay, going back to competent. Georgia worked at that hotel just a little. I think she came to work after I did, so we worked for many years together. We were both really good employees, both very honest and ethical people. So they knew that were going to happen. Okay. So we want to make sure we separate all of those functions. That's a good line of defense. Okay. Having audits, having internal audits performed by the employees. Okay. Um, if you are a corporation, then you are required to have an external audit. Um, you don't have to be a corporation just to have an audit. You could be a church. I've often said I feel like some churches really need some external auditors coming in because there's a lot of fraud when it comes to churches. Okay. Any documents, electronic devices, for example, sensors attached to inventory can reduce theft. Most of those aren't even active. How many times have you gotten home with one on your clothes and you're like, oh, it didn't beep when you went out because it wasn't active. Okay. So there's all those things. With e-commerce now, we can have encryption, firewalls, passwords, pins, and signatures. Okay. Here at CBC, we have this two-factor author authentication. And so, for us to get into our email and use other computers, we have to have our phone so we can get those codes and put them in. So that's a really good line of defense so that nobody gets a hold of our records. Okay. Other controls, it could be just as simple as locking the cash drawer up or locking a door. Okay. Fireproof vaults, alarms, loss prevention specialist. You could have your employees bonded. If you have employees who are handling a lot of cash, they need to be bonded. And basically, it's insurance policy if that person stole any cash, then the insurance policy would kick in and provide for that. Okay. This is the one I love, mandatory vacations. If you walk into a company and they say this dedicated employee over here has worked for 50 years with no vacation, that is probably the person stealing. I know. You turn into a very skeptical person when you're an accountant, but that is exactly who I would check first. Why didn't they take a vacation? Because they needed to be there every single day to cover up the fraud. Okay. And you can make employees take a vacation and they could take a vacation, but if nobody else does their job while they're gone, then they're going to get away with it too because they're still going to be covering up the fraud every day. Nobody looked at it. It should be a mandatory vacation, and somebody else should do that job for the week, 2 weeks, however long the vacation is. Or we're just going to switch y'all up and do job rotation. But you also got to be sure when you're doing this job rotation, you got to go back to that arc, make sure you're not crossing those functions as well. Okay. There is a lot on data analytics and accounting now. We have the cryptocurrencies, Bitcoin, and those different things. They have no actual value or physical form. They, right now, the IRS, if you have a loss on Bitcoin, you do not get to take that loss off on your tax return. They do not recognize it right now. Okay. Okay, I talked about collusion already. You can remember me and my friend Georgia. We did not do that, by the way. All right, I will see y'all in the next video. Learning objective 2 and 3 is coming up.